Hello, I am Lisa J. Stocks. Thank you for tuning in for this week's Stock Talk episode. And I just want to get started by touching on what we've seen in this last week. Things in 2026 have been slow as far as growth when it comes to my portfolio, but things for now have turned around. Now, I'm not saying the volatility is over, all this back and forth with what's going on with the Straits of Hormuz being open, closed, war tensions, still tariff tensions, all the things that are trickling down to our finances are still there. But with what's going on right now, still um, extreme circumstances. But for now, we're seeing progress when it comes to our portfolio. So I'm happy to see it. And even when things were rough a few weeks back, when my portfolio was really pulling back, when I was having those positions that I've been building in for months now, and I was still in the red, it didn't discourage me. And I mean this honestly and truthfully. That's why, I still share real numbers when I do my regular videos because the market is going to give us what it's going to give us, and I'm going to work with it to my benefit. I know what my goals are. I know what I'm trying to achieve, and so nothing is going to hold me back and nothing is going to discourage me, especially now as I'm older, as I'm wiser, and I have an understanding of what is going on, and so I can work with whatever the market is giving me to my benefit. And thank you so much, Vincent. Happy Sunday to you also. Thank you for that first super chat of the day. Let me go put a like on it in the chat. Okay. So, what is going on? Let me just, this is really not part of my topic, but I feel like I can't just brush over it because when it comes to my investments, it's one of those times where I can say I'm the richest I've ever been because the indices across the board, many of my larger holdings have hit all-time highs in the last few days. On Friday, April 17th, the S&P, the Nasdaq, and the Dow all hit fresh highs. Investments like I have as far as, my long-term portfolio, I've pulled up a few examples here with VTI and SPMO. They were trading at highs at the end of last week also. And so SPMO, this is a newer addition to my portfolio that I just started a few weeks ago. It's at about $128. And I've been DCAing into it, buying about 0.1 per day, which comes out to about $12, depending on the price of the investment currently. But when it was coming down to 114, I think even as low as $111, those were days that I picked up full shares in order to continue building onto my position. And now you see things have turned around. It's up even higher than when I started. It's broken the all-time high of when I started investing into it just in late 2025. And so another position that I've been building into is SMH. And, that gives exposure to those top semiconductor companies, NVIDIA, TSM, but also AMD, which is one that I'm getting exposure to through my ETFs, especially a higher weighting when it comes to SMH, but I'm also getting exposure to it because I am a direct investor into it. And so I was trying to buy that one when it was down around the 200, 195 mark. And now that's another one that has really turned around in the last couple of weeks. Let me just see if I can pull that one up. And always remember, my message here, you don't have to invest into individual stocks, but But AMD, like I said, I was buying dollar cost averaging into it on a regular basis at around 195, 199, around that price point. Year to date, it's up 30%. Let's see. You see, even February, 196, 190 in March, and you see it has really taken off. And yeah, this is what happens, and this is why I'm not afraid to put the work into being consistent, investing into what I've done the work to decide for myself are quality, long-term investments that I want to have exposure to when it comes to my portfolio. So this is one of them. Let me take a quick second to take a look at the chat. Again, hello to Vincent, Mac, that. Hey, Lisa, I know you're extremely bullish on Bitcoin. I know I'm extremely bullish on Bitcoin. Some will say I'm crazy, but honestly, I think personal finance can be summed up in 4 words. Stay humble and stack stats at all I have is Bitcoin and cash. Okay, I am not on board with that. I do a mix. I do have a position in Bitcoin, Ethereum, XRP. I even have some Shiba Inu. I have 4 million of Shiba Inu still sitting in my portfolio. That was just something I had to have just in case. But yes, I do invest into crypto, but I invest into it all, basically. I'm one for striving for growth, not bonds or anything that is that slow moving for me right now, and definitely not trying to sit in cash. Hey, dirty carpet. Hello, hello, hello. You have to, oh, I'm sorry. I am so, no. I said the name correctly. Okay. So guys, thank you guys for tuning in. Let me get into today's topic. But yes, the way the market has been moving, I felt like I couldn't just get going with talking about different things without first touching on that. Let's bring up the S&P. Yes. You see everything, just like the AM, not as extreme as AMD. But yeah, we see how things have really turned around. The move we had in the last week, what's today's date? We're at the 19th. Over the last 2 weeks, we saw things pushing up. And then by the time we got into last week, we were actually breaking the highs. I think it was on Wednesday, I was on live with one of the crown traders over at KGU when, the SPY first broke that 7,000 point for the first time. And yeah, it's continued to push up from there. But this is why I am glad that I am a long-term investor, buy and hold investor, not ready to turn my back on my investments. And I've seen people quite disappointed at some stories that I've heard, most of the stories that I've heard of people who sold while things were down or were apprehensive to build while the market was down, not realizing that that is when we have the real opportunities. But really, today's live is called Let's Find Your Missing Investing Money. I know what we just went through. The market is turning around, hitting all-time highs, but don't ever let that turn you off to what's going on in the stock market. In 2025, I don't know how many times my investments, it was a strong year. There are going to be times where the market is in the bear market, we can have a long time frame. We can have a whole year with 0 all-time highs hit, but then we can have those years with 20 hit. So just because you hear that, don't think it's not the time to invest. Unless you are the chart GOAT, don't sit around on the sidelines thinking that you're going to be there to to time the bottom perfectly. This is why I love dollar cost averaging, because you can just steadily be investing, and also it can work with any budget. If you're just setting aside money weekly, bi-weekly, however you're paid, whatever system works for you, but just steadily investing all of the time. You don't have to be like me and do it down to the daily, but just keep on building. And then if you want to, I've talked to people that don't buy the dip. They just stay consistent with their strategy. Without, like I was mentioning, I was buying full shares of SPMO when it was coming down below 114, 113. Those were the points where I said, okay, no $12, no 0.1 invest today. It's going to be 5 full shares, 6 full shares today, because I really see a price I like. And so I'm going to go as hard as my budget will allow for. So that's how I go about building. And I hope that everyone, it's easier for us. I was one of those people that just for a long time was just contributing through my 401k. So there was no thought into what I had to do to plan, to build. But as later in life, I really see that I can do more. That you, in addition to that, if you're working, you can have a Roth IRA to give you more flexibility. I incorporated having a UTMA for my daughter, having an investment account for my business. So all of these things led to me having to take more hands-on responsibility and being mindful of prices, taking advantage of the all of the features that are here for us, being able to put in limit orders at lower prices, being able to be consistent with investing on my own. Outside of that simplicity that is built in from just signing up for your 401k, every paycheck the money comes out, it's invested. You don't have to do anything other than make that initial decision on what you're going to invest into. And I'm not going to get off into that. Maybe later on I'll touch on that, because that's another one of my favorite topics that I want to get. Not a favorite topic. It's one of my messages that I always want to make sure that I'm getting out there, because I want people to be in tune with what the market is doing, like what we're looking at right here, to make sure that when you're looking at your investment accounts, when you're looking at your retirement accounts, is it doing what the standard of the market is? And the S&P 500 is a good way to gauge that. So if your portfolio, if your retirement account that you're putting your hard-earned money into is not in line with what we're seeing here, 5 years, 70% gain, this is what I want for you. And you need to dig deep and dig hard, and you push for yourself, advocate for yourself to make sure that you are on track to create the life, create the financial freedom that we all deserve. So let me take a look at this comment. Lisa, thank you for giving me the courage to leave my brokerage firm and self-direct my own accounts. I'm going to basically follow your accounts as well as my own positions. Thank you for that. That is such a compliment, and I'm glad that this is what I want for everyone. I don't want anyone to think investing is hard, to be intimidated by anything out here. If I can do it, I know that you can. And it's something that I want you to take on this, and I want you to instill this in the young people around you. If you're not a parent, whoever is willing to listen, that it is something that we all need to have an understanding of. It is an opportunity, most likely, almost all of us, as we get older, we get started working. This is the way that we have to. This is the opportunity that is presented to us to build wealth. There's no pension anymore. We have to do it ourselves. And I'm just totally off topic today, but I'm feeling what I'm saying, and this is important to me. it's a matter of, I've talked to people and they said things to me like, I work at whatever company, whatever prestigious university that they think that, whatever they think they're where they work, they think that the retirement account is, they don't have to think, like they don't have to worry, like they're going to have us into something that is good and beneficial and to have us on track. And it's really not true. I have been in your shoes. I've thought that to myself. And when I had an understanding and I went and I asked questions and I took time to make calls, I've even physically gone and I've had Zoom calls, or, I've had, online calls. I've physically made the time to go to Fidelity in person. I have an understanding of everything that I talk about and everything that I have made adjustments to in my portfolio. Don't think that someone else has your best interests at heart. You have to find out for yourself what is the best fit for you and what is not. The fit that they might want to and put you into could be something that is more beneficial to the company, of the brokerage company, than it is for you. Higher fees, lower performance when there is something else that is much more beneficial. I've seen it over and over again. I have one-on-ones that I have booked with people, and I definitely, tell them ahead of time, you have to, especially if we need to, if a part of what you want to work on is your employer retirement account, you're going to have to give me some of those specifics of all the things that are available to you, because I don't know what your company has in place with TD Price or some broker that I've never had experience with. So when we dig through, I haven't had an experience yet that I didn't find a better fund for them to be investing into other than what they were defaulted into. And another thing that you can do, I've mentioned this before, if you've been here before, is that even going by a target date fund that does not necessarily correspond to your retirement age could also be very beneficial. Now, this is not financial advice. I'm just sharing my personal journey, steps that I've made, steps that I have implemented that have really made those improvements when it comes to building up my portfolio. And so those target date funds become too conservative too quickly. I'm aiming to be 92. If I can get even a little bit higher, I want to be that percentage, about over 90%, into stocks. I don't want to be heavily weighted into anything related to bonds and things that are moving potentially at a rate less than even my high yield savings account. So be mindful of all these things. Yes, you are so right. This is great. This is great confirmation. Okay. Just taking a look at the chat. Thank you guys for tuning in and chatting. Make sure you give the live a thumbs up. And I'm just going to get a little bit into my topic of the day, but feel free to drop any questions. I will make sure to take breaks. Take a look at what Nightbot is dropping in the comments. If you're not familiar, I have channel membership. I am a crown trader over at KGU, which is Keenan Grace's Discord. There are ways to support the channel. So take a look at what I have listed in my description, what you see here in the chat. And always like and comment on when you're here in the live, as well as my videos and shorts, to let me know that you're there. Okay, hello there, Dr. Ninja. I think you might be still on vacation. I hope you are enjoying your trip. Nora, hello there, Nora. Shout out to all my channel members. Okay. All right, so guys, you guys are even late. I've already been touching on, the all-time highs, and to make sure to keep going. But by tomorrow, there will be chapters on this live stream. If you guys ever do come back for a replay, I do try to, do a little bit of extra work to them so that you can come back and enjoy my lives and be able to navigate them if you do get in late to see, what you might have missed so you can pick up. So now let's talk a bit about those money leaks that are going on in your portfolio. And I'm always touching on this. I did a live recently, and it was about financial freedom versus survival mode. And I don't want us to be living in survival mode. I want us to be thriving. I don't want us to be fearful when the market is down. I want us to have an understanding. And sometimes it just takes just a little bit of effort of taking a look back, reflecting on the last 20, 30, 40 years. We have the history when it comes to these indices. We've gone through things in our lifetimes. We've seen the housing market back in 2008. We've been through war times. Most of us, don't know everyone's age, but yeah, we've been old enough to realize we've seen gas prices going sky high. We've been through these things, and we've all lived through a real, what you might say, like the black swan event of COVID-19. So something that we didn't have really something similar to reflect on. And now with this administration, we're just seeing it all. And we have to be ready for it and realize how to navigate it to benefit ourselves. Okay, so now let's talk about those places that you can potentially find money, because let's go back to a shorter time frame here, just for a visual, year to date. When we are going through February down to the end of March, looking like this. Not every investment, I'm not saying this across the board, whatever you invest into, I don't want you to see you riding the wave down on everything that might cross your mind, that you might hear about from whoever at the gym, and think that it's going to go up. But when you invest into good quality funds that are giving you, exposure to the top 500 companies, the top semiconductor companies, the top healthcare, whatever you are inclined to invest into, quality blue chip stocks. And that, I'm not going to say, everything that I invest into may not be the fit for you. You may not want to invest into Meta and Microsoft as individual stocks, or AMD, which we were talking about earlier. But take a look, have an understanding of what you are investing into, and realize that if it is a quality company and it's being impacted by the news, what is going on currently, that you can expect you could potentially have this type of turnaround. And this is what you want. You think of the concept, and I don't want to just say buy low, sell high. I'm a long-term investor. I want our first priority to be holding for, the long term, planning for retirement. If you want to then do a short-term account and then, a long-term tax advantage retirement account, prioritize. For me, it's my number one account. My top priority is always going to be retirement. Then after that is going to be those taxable accounts that are going to give flexibility. Then, I have to make sure I'm set before I can try to be building up my daughter's portfolio. She, especially for those of us that got started a little later in life, you may not be able to potentially pay for your child's college and do all of those big things for them because, we have to move forward with trying to catch up. But I always encourage us to do something for them, even if it is small amounts. If we're going to be spending for the Easter baskets and all those things, the sneakers, the games, put some money towards their future also. And shout out to Craig. I want to acknowledge you. Appreciate that super chat, and I appreciate you tuning in. Make sure to drop your questions and comments. Oh, I see you did make a comment before the super chats. Let me take a look at that. I think people make trading and investing harder than what it is, but just come from where we come from. Okay. Definitely. I had someone use the word overwhelming in asking me a question recently. And I was like, first off, none of that. There's no overwhelming. You are not alone, and we are going to figure this out. And so we're not in this alone. If you're here, you're welcome to become a bigger part of my community. But if you're here tuning into the lives or making a comment on my videos, I will do my best to respond to you. If it is a little bit of insight or direction, or my personal experience that I can share with you. Survival mode is making me ugly. Okay. I will be on the replay crew. Thank you so much for that, Daryl. I appreciate that. Okay. Elevated is here. Hello, Elevated. Hello, Eddie. Okay. All right. Thank you guys for chatting. Let me see if there's anything new. All right. So yeah, today I just seem like I'm very chatty. But Tashiria, hello. All right. So now let's talk a bit more about where you're going to find this money. And I want to just throw this out as an example, because people often, there's certain things that you would not stand for. And I want you to be more aggressive and push harder when it comes to your investments. And let me jot this down. Something else I wanted to talk about. This, I'm going to come back to it though. If your direct deposit did not hit your bank account, you would be on that phone. You would be figuring it out. If for some reason something went wrong with your payroll department and something didn't quite seem right, you're going to stop everything and get this resolved ASAP. There's not going to be any waiting. There's not going to be, I think it's okay. You're going to get it sorted out. And I think that a lot of people, when it comes to their investment accounts, when it comes to their bank accounts, as far as fees and the APY and the interest rates on your credit cards, those things, you let those things slide and give them time to be eating away at the potential that just eating away at what you should be keeping in your pocket. And so I like to give examples like that because there's no reason for it. We need to take things more seriously. There's certain things we're taking seriously, and certain things that I think some people will let 6 months, even years pass, and they're not doing what I'm encouraging, having a handle on every last dollar so that you're not wasting money, and so that you can be putting the money into the market. And I mean any amount of money. I will proudly invest $1, $5, $20. You might not think that those amounts are significant, but it's not a one-time thing for me. If you can get that on a recurring investment for your child, for yourself, in your taxable brokerage account, put it towards building up your trading account if you're a trader, whatever it is. Get that going and be consistent with it. I built a portfolio that's over $12,000 now, $10 at a time. And I love to reference that one as an example because when I started that, it was $10. I joined the challenge over at KGU. This was back in 2022. one of my first challenges that I did, $10 a day for 10 weeks. I kept it going for over 3 years. I didn't have a plan. I did not have a set plan that I'm going to keep it going for this amount of time. And I wasn't going to the investment calculator saying, I want to get this portfolio to a certain amount. In time, I started to do those things. And now just as of January, I stopped contributing to that because I want to work on some other positions. But the thing is, now I'm able to share that as one of my stories in my journey to building wealth. And I can go and I can show you from time to time how it's still growing, how I'm going to just hold on to it for now. And potentially that portfolio, that's the only thing that's in it. I haven't been using, I have multiple accounts, different accounts for different reasons. I did that challenge over at Public. It's basically the only thing I have over there. And right now, I'm driving a car that has about 117,000 miles on it. Not going to last me the rest of my life. When the time comes, that portfolio might be what I use towards the down payment towards the next car. I'm just going to hold on to it. I'm just going to allow it to keep on growing. And that holds VTI, if I didn't say it. And VTI just hit an all-time high on last week. So it's going to go up, it's going to go down, but I know I'm not buying the car tomorrow. I'm holding it. I'm holding, and I'm sure that I'm going to, get into probably some extensive repairs. I'm going to hold on to that car as long as I possibly can. It's not like I'm not one to jump into having to replace a car, potentially having a car payment. I will never be one of these people in a car payment, that's going on for 7 or years to the point where my payment, the amount that I still owe on the car is less than the value of the car. That's what's going on today in society, and that's not going to be me. I have 117 is not bad. Yours has 300 elevated. Wow. I'm actually driving a family member's car right now, and I looked down last night, and their car has 17,000 miles on it. And I said to my younger daughter who was with me, I said, this car has 17,000 on it. I said, my car has about 117. This is different. These new cars, and it's actually the same make and model as my car, but mine's older. These cars nowadays, you got to do the push to start and the slide in this, and I have to press a button to put it into park. It's hard. When I went to buy this last car that I had never even had a car that came with a backup camera, as a standard feature. They're trying to show me this, and I'm thinking to myself, I've been driving for a whole long time. I don't need no backup camera. I know how to park the car. Like, these were not features that excited me. But let me get back on track with my topic. Thank you guys for tuning in and chatting. Please don't forget to like, subscribe, hit the notification bell, become a channel member, and check out my referral links. Open an account at MooMoo. All the ways that you can support the channel. But at the very least, give the live a thumbs up and chat with us today. Okay, so now looking for money so that when these times roll around, we can focus on putting that extra 20, 50, 100, whatever you can find. I've made adjustments to my home, like Wi-Fi, and I used to have a house phone. I turned off the house phone. I know that I was kind of, most of you guys have probably already done that, but it was part of a bundle. Like, they had a cable phone and home Wi-Fi package, but I've made adjustments to my package. I eliminated the house phone, everybody's going to have to get their calls here. If we're in a hurricane or something, bad weather, there's no landline anymore. And I had like, not a cordless phone. I had an actual phone that didn't take any electricity, so I could use it if we were, dealing with power outage and things, Hurricane Sandy, and those times when things got rough. But yeah, I don't have that anymore. Um, and I made adjustments there. I've made adjustments to my cell phone. I turned off my XM radio in my car. I've evaluated other subscriptions. And I'm just touching on this because, I'm not saying, if you truly go to the gym, if you truly use the streaming service, not necessarily turn them off, but is there a different plan? Can any adjustment be made? If you call them up, is there some retention department that might give you a special, pricing or something that the new customers are getting that could cut your bill even for 6 months, giving you more time to go and find a different service provider in order to save more money. And once you save it, then if your savings account, emergency funds, sinking funds are not built up, literally save it. If not, do what we're always talking about over here, invest it. So this is what I'm talking about. Hunt through your subscriptions, through your budget. And then once you do that, you can turn literally what that bill was, that XM radio, or if you're able to get your gym membership down by $10 or something like that, even if it's $10 a month, or $10, however your pay period is, add those things up. Make that a recurring deposit into your brokerage account. As you find it, reallocate it into something that is going to be more beneficial for you. And then, of course, if it is in the investment account, choose that investment that's going to that extra love and attention. That's what I've been able to give to my portfolios by doing certain challenges, doing certain stretches of time where I'm focused on a certain investment. Webull is one of the brokerages that does it the easiest, but I'm good about, once I make a certain commitment, I'm going to go in, and even if it is manually, I'm going in every day, and I'm going to do my minimum on those times when the price is really the price that I like. I can go heavier, or I can have that limit order in order to buy a full share. It all depends on how my budget is. Now, that's going to be harder to do with an investment that's like Microsoft, that's a higher share price than Apple or something like that, So I've been DCAing into Microsoft, dollar cost averaging. So this is $400. That's a bigger investment and a larger sum of money that I'm going to have sitting in order to pick up full shares. But I definitely was putting my work into building up my Microsoft position when it was down 370 to 390, and now another one, just like pretty much everything in my portfolio that has pushed up over the last couple of weeks, especially. So let me take a quick look at the chat. You don't have any cable either? Yes. There's so many different streaming services and different ways. I was live with Marlene on Friday, and I was touching on something that I haven't done, but by getting your library card, that gives you access to more free resources as far as those books that you might want to listen to, as well as additional streaming services, because we might want something more educational, something different, not just Tubi, but I know there are quite a few out there. But yeah, I'm thinking, before I resort to having to pay for something, I'm thinking about these things and trying to give them a try, maybe even at the same time while I'm paying for a certain subscription, to say, to give my chances to see whether something can be eliminated out of my portfolio. Okay, okay. All right. So that's something I'm always touching on because, yeah, it's not necessarily about getting rid of the subscription altogether. There sometimes is an adjustment that could be made, lowering the plan. And then, um, what's next? Oh, let's talk a little bit about impulse buying. It's another thing. If you just because give yourself, like, I understand some things are time sensitive, but if you give yourself a little, even a couple of days to do some price comparisons, to take the time to go to a lower cost provider for certain things, I have a friend and I know she's on a fixed income. And so I haven't had the opportunity yet, but I want to, if she's receptive to it, have a conversation with her to find out, where is she buying her groceries? Where is she buying her paper products from? To really see, is she maximizing things? Because even going to Walmart, not necessarily a Costco or a BJ's that takes a paid subscription, going to Aldi and going to Walmart, going to lower cost places, can also be a way of saving money in your budget. The local supermarket prices, I want to make sure that that's something that she's in tune with in order to maximize her money, because she has some health issues that don't allow for her to do certain things. And so I want her to be able to free up money for things that might not have to be an expense in my budget or yours, but I feel that she needs to make sure that there are money, a budget put aside for certain things. Weeble stock under $7. I am just saying it's something all there are for every price range. Yes. And I'm not against well, that's just a little bit above. When I say penny stock, I mean $5 or below. Sometimes things are lower priced and still have some potential for, um, strong growth. I actually have Weevil stock in my portfolio. I don't have any Hood, which with Robinhood being tapped to be the provider for the Trump accounts for the children, is really, along with other things, is really going to be a catalyst for them to be a company that is thriving. But yes, I have some Weevil stock. I'm hoping that Weevil does really pick back up again. It's something that I've been using. That's where I do all of my options trading. So definitely an account. I have my growth portfolio there, my taxable account growth portfolio. That's where I hold all of my Apple, Meta, Tesla, Google, all those different type of things that I plan on using, whenever I want, outside of my retirement accounts. I have all of my retirement accounts, my daughter's accounts, all those type of things. I do those over at Fidelity. Just sharing in case you guys were ever wondering or have not heard me tell that part of my story. Another place where I have a portfolio, which was primarily my dividend portfolio, but now I've incorporated a few new additions to it. So it's not strictly my dividend portfolio, but that is over on my account at MooMoo. Okay. So yes, impulse check when it comes to your portfolio. And, it's that time of year, I think, down in like I'm on the East Coast, so our graduations are going to be in June. I think maybe down in Texas and other areas, it might be coming up next month in May. But, whatever it is, whether it's graduations, birthdays, holidays, all of these different things, they shouldn't be a surprise. They shouldn't be sneaking up on us. Weddings, different events that might be coming up. Be mindful, be planning. Don't have to pay expedited shipping charges for different things that are coming up. That you need to be planning for. Don't let these things sneak up on you because they're not surprises to your portfolio, to your budget, not to your portfolio. They're not surprises to what you need to have allocated for those expenses that are coming up. And now, yeah, I was talking about your bank account earlier. I was using it as an example of if your direct deposit did not hit your bank account, you would be on it as soon as possible. But are you mindful of any fees that you might be charged? Are you making sure that you have a bulk of your money? Not, I have an account at my local bank, but I'm keeping a minimal amount there. I'm basically just using it for my checking account because the APY is 0.01. When it comes to, accounts, money that I have sitting, it's going to be at Fidelity in my SPACs, that has a more reasonable APY. They have come down over the last few years. Most of them were, in the high 4 point whatever to 5.1, 5.2% a couple of years back. Now for most of mine, they are below 4.0%, maybe about 3.6, 3.7, but so much more significant than my local bank. So I keep a minimum amount there. I don't let money just be sitting in the checking account for no reason. If I need to transfer, it takes 1 or 2 days. I'm just being mindful of that because I want my money to be growing. And so I'm not going to be paying a $10 a month fees and a fee for not having a certain balance. And I don't need anything. I don't need any of that eating away at my money. I want my money to be growing. I don't want to be losing any of it to any of this nonsense that goes on with these banks and these fees. And the same thing goes with my investment portfolios. If I'm paying the expense ratio, I do have a couple of investments with a higher expense ratio, like SPMO. SPMO, I think, is 0.13, but SMH might be like 0.35%. I'm saying this off the top of my head, so please excuse me if I misquote anything because I don't have this stuff pulled up, which I can. But actually, I think I had put some funds into a something to share here. Yeah, I can throw them in here. And I was putting these in here because I was thinking of an example. Let me put in what I just mentioned: SPMO and SMH. SMH. So yeah, I'm not saying everything has to be 0.015 or 0.02, 0.3. I'm not saying the expense ratio has to be that low. I'm making sure to have an understanding of what the expense ratio is. If it is, does it warrant, do I feel that the expense ratio is worth the fees that I'm paying? So that's how I go about deciding what's the right fit for my portfolio. That performance has to be substantial and in line with what they're charging in fees for a particular fund. And so, I wanted to mention, coming up in the next week or so, we're going to be having some stock splits. Not that I ever let that hold me back because I have many different accounts, all of which allow me to buy fractional shares, some starting at as low as $1, and some others starting at $5. But whether it's Fidelity, it's MooMoo, it's Webull, I'm not held back by any investment that I've wanted to have exposure to, they're all now available to me to invest into through fractional shares. And for those of you who might not have that, coming up in the next few days, I think around the 24th, we're going to be having some share splits when it comes to a few of the Vanguard funds. And I've done a video about that. I might reshare that on my community wall. And I have two of those on the list here, and they are VGT and VUG, and they're going to be having splits coming up soon. And so current stock price of VGT is a little over $800. VUG is nearly $500. So once we have those splits, you're going to be able to invest into this $70 or so per share, depending on the price, whether it's a 6 or an 8 split. But if you happen to be at a broker that does not allow for fractional shares, be on the lookout for these things. If for some reason you were being held back by that, waiting to build up sums of money, not an obstacle for me, but I'm just mentioning it. And also, it can be a nice psychological boost that you're going to see your share sizes increasing. And then, it's not all, I happen to do it just because I like to set goals for myself. Sometimes I set dollar goals. Sometimes I set share size goals. But you have to do what gives you that incentive to keep on going, to keep on building. And so those two are going to be having a split. But I happen to invest into VOO, which has a little bit of a higher share price. It's right now, it's on a hold status. I bought, I'm holding. I'm not really building into it, but the shares price for VOO, $652. While we have SPYM is $83. So, and it has a lower expense ratio than VOO. So just have your eyes open. I always like to highlight different things like this. I don't want anyone to be held back from investing, not feel like there's, it's not a good fit for them. I wouldn't know how to do that for my kids. It's not hard. It's not expensive. You have the flexibility. Even these ones here, $83. I happen to invest into FSPGX. That's my alternative that I chose, similar to VUG. And that one right now is $46 per share. There's no reason that we can't invest. Okay. So Craig, you didn't know about the VUG split. I hope you take a look. You're making me want to go and share my video right now. I want everyone to know it's coming, and I give the full breakdown of all of the funds in that video. So go ahead and take a look at that one. I'm going to reshare it to my community wall because it's coming up in the next few days. Okay, let's see. Create a post. I'm posting it right now. So that is on the community wall if you guys want to check that out after the live. So yeah, I already feel like the availability of fractional shares, like Neo is saying, it's easier than ever to get started with investing. But listen, I just want you to know I agree with that 100%. But if you still thought that there was anything in there that, was an issue, mention it. Let's talk about it, because I don't want anything to hold you back from doing this. And I was just talking to my daughter. I want her to get more on board with her investing. She does not have a Roth IRA yet, but yes, she only has her UTMA account and her Fidelity Youth account. But yeah, I'm ready to start putting a little bit of money into the Roth IRA for her, and for her to be allocating a little bit there herself. She has her own earned income. So I want to see it get going. Okay, definitely gonna take a look. Thank you. I had someone tell me like I'm the only this is a couple weeks ago. I know other people have made videos since, but they was like, "Lisa, you were the first one talking about that." Um, okay. Oh, the Vanguard. Okay, VGT is scheduled to undergo an 8 split effective. Okay. This is the first share split for the okay. Yes, I'm sorry. I did that video a couple weeks back. So it gives a breakdown. I think the detail is there. But I've done a few videos since, and I'm always reading. I'm always researching things. But all the detail is there. I try to put chapters on my videos so you guys can easily navigate them, and make sure to leave me some comments over there too. Guys, don't forget liking and commenting. It helps. It helps the channel. It helps the engagement, and it also lets me know that you were there supporting me. Um, I have my sinking funds in my bank account. It's not there to grow. Yes. My sinking funds, I have them at Discover, so I feel like it's doing both. It's not growing at the rate of the stock market, but it's growing more than it would at my local bank or credit union that have those extremely low rates. So I'm glad for the little, like I said, I think about 3.7% that I'm gaining, because I think I was saying last week, I still haven't gotten my 4 tires for my car. I know things come up, and when I go in and have to take those more substantial hits to my credit card, $700, $800, $1,000 for a car repair, or something like that. I want to have that cash handy so that I'm getting my credit cards cleared up, no interest hitting me. So, okay, so I had this up just to kind of share, you know, different stock prices or ETF, mutual funds. There are varying price points, but we can find a way to work with it, even if it is. I think that I can't remember the name. Someone earlier said that they had I think they included in their comment that they Dirty. I need a new name. I need a different name to call you. But Dirty was sharing a comment of I think included in the comment was changing their broker. So yes, I had to do it, and it took me a minute to do it. I closed my account. I fled. This is the way I'm describing it. Going Noel. Okay, thank you. I might not be able to remember that. There's lots of people. I have lots of YouTube friends that don't have their name incorporated into their they don't have their first name incorporated into their YouTube name. So I have to sometime work to start to remember them. Um, but yes, I fled empowerment and I went over to Fidelity, and I'm so glad that I didn't let that drag on any longer. And one of my first, well, it wasn't my first, because I had actually worked at 2 companies back to back that used Fidelity for my 401k. So I already had multiple accounts over there. I was familiar with them. I was getting more in tune with their funds, though I was limited, especially for the company that I was currently working at. I was limited to what was available through the fund, through the 401k investment options. But I was getting more familiar with Fidelity as a whole. And then once I transferred the money from Empowerment over to Fidelity, and I got started with investing over there, that is part of my FXAIX investments that I've been sharing since 2023. I've been sharing updates on that here on my channel. So I left a target date fund that I believe had about a 0.92 or 0.93% expense ratio. And poor performance to go over and invest into some FXAIX over at Fidelity and made huge improvements to my portfolio just by doing that. Okay. Yes. All right. So Craig is ready for the splits. All right. So I think I touched on a lot of, what I'm always talking about over here. I want you to audit your accounts. I want you to realize that you don't necessarily have, there could be a fund. If you have to have Vanguard, or you have to have Charles Schwab, that's on you. But there could be a fund with the same expense ratio, extremely similar performance. Don't think that, take the time, put in the work to do your research and find what is the best fit for you. Now, I had not heard of FXAIX until I did my research and combed through all of those funds. And to find something that I feel is a good fit inside of my IRA, a better fit for me than a VOO or a SPYM. So it just took the time to open my eyes and realize that it's out there. So, Lisa, I was told you are going live on Tuesday. Is this correct? Going live where on Tuesday? I didn't have any plans to go live on Tuesday. Where were you told this? But I can, let me go back. Yeah, tell me more. Tell me more. I can go live on Tuesday if you like. If you're going to be there, if you're going to be there supporting, I can consider that. Tell me what topic you would like on Tuesday. It's going to be late at night though, because I am busy. I am busy. Okay, so I think the last thing I wanted to touch on, and I kind of touched on, and this always happens, I kind of touch on certain things throughout the show, and that was automation, like I was talking about with, once you find those money leaks and you might make adjustments to a few of your bills. And now, oh, I found $70. Now make sure that you're allocating it to savings automatically if you can. If you found that amount, even if it is on a monthly basis, a small amount on a monthly basis, get it moving, get it going to where it's needed in your budget on your journey right now. It's not all about investing over here. I realize that we are in different stages of our journey, or we might have run into something that, kind of might have depleted our savings. So I'm okay with talking about savings over here. I want our money, wherever it is, to be maximized and growing for us. I don't want us to be sitting on a lot of cash, a reasonable amount based on what you think might come up, what could happen as far as, getting laid off and needing liquidity. But I'll tell you, in my personal experience, I sat on too much cash back when we went into lockdown years ago with that situation that we had, because I was newer to that company at that time. And I was kind of wary that if anything does happen, most likely I'll be the one that gets laid off first. And so I sat on cash that could have been invested, more money that could have been in the market. Is when 2020, 24 and 2025 rolled around, I could have had much more money in, that 2020 to 2023 range to be taken advantage of, these back-to-back years with 20% growth, huge growth when it comes to NVIDIA and even, individual stocks, as well as the funds that I have chosen for my portfolio, which most of them, not everything is perfect, but most of them have been choices that have been right for me. Okay. I'm taking a look back at the chat. But yes, I don't know. I'm losing my train of thought. I thought I was talking about automation, and I feel like I was off on something else again. Okay. So guys, let me know if after the live is over, if you could leave me any comments of things that you might want to see as far as videos. Like I was thinking about doing a video on setting up recurring investments and deposits in Fidelity. Is that something that you would be interested in? Share those type of things and let me know, because I want to be here to support the needs and interests of everyone who is here tuning in, supporting the channel. I'm glad you enjoyed the show. I hope you have a great rest of your weekend. Lisa, I was told you, okay. What's the ticker symbol for Fidelity? For the Fidelity fund that I mentioned, this is one of my biggest S&P 500 investments at Fidelity. I put it down there. If you're on your phone, you can take a screenshot, but I will actually share my last update to my community wall again. So you'll be able to see anyone who's interested. I already put up the Vanguard share split video. So I'm going to share my last update. I think I just did that one on Monday. And you know what? I gave my update on Monday when my dividends hit. It was my quarterly dividend, but they come in a couple of weeks after, not literally at the end of the quarter. So on the Monday when I shared my update, I think Tuesday, by Tuesday, Wednesday, no, it was Wednesday. I think Wednesday, the S&P hit an all-time high. So my portfolio in my update that I shared, the last update that I shared, it was recovering. It had some drastic improvement. I even said in the video, I didn't wait for today to share this update because the market has been improving. I just wanted to share my my quarterly dividend that I had gotten for VOO and FXAIX, and that was the day that it happened to have hit. But yes, now I think back in January when I shared my update, between my two S&P 500 investments that I've been sharing, I was up about $65,000 between the VOO and the FXAIX. But I would say by the time we got to Friday of last week, with the all-time highs pushing up, that now the one investment, FXAIX, is now up about the 65,000. So it's up maybe about close to 5,000 from January. Now, I know that the market, it goes up, it goes down. These are unrealized gains, but I'm looking at this, I'm knowing that I feel confident in what I've invested into. And I know we're having all-time highs now. We will have all-time highs again, and I will just keep on holding, and I will be reaping the rewards in my portfolio when the time comes, when I'm at the end of the road and ready to tap into all of these portfolios, whether that is when I'm, definitely into retirement age or early retirement, or in need of something that I have investments to take profit from in order to take care of things without having to take out a loan or anything like that. So. Or if anything, I haven't looked into it or considered it yet, but it's another option of taking a loan against my portfolio, or not necessarily even having to sell my shares. So, okay. It's all about the long term. Yes, yes, yes. Okay. So guys, I hope you enjoyed the show. Like I said, I always do try to come back to them and optimize them up a little bit, make them easy for you to navigate. I'm going to share my last FXAIX video to my community wall right now because it's something else that we touched on in the show. So just to make them handy for you, if you guys want to check them out, I appreciate it. I appreciate your support of the channel in all the different ways that you're able to, by being here, chatting, becoming a channel member. Okay. And thank you, Miss Felicia, for being here today. I appreciate the visit. You talked about AMD. Yes, I did talk about AMD. Do you have a question about AMD, Eddie? AMD, Taiwan Semi, and NVIDIA are 3 companies that I am investing into. That's I felt like I think after those 3, I like to build up my position size. I don't want to have a half a share of Apple, and I don't want to have very small positions in 35 different things. So when I mention something, it might, I'm going to be building into it for an amount of time. I want to see, everything is not, like I mentioned, I can't necessarily say I want to have 100 shares or 50 shares of everything, because different investment has different price points on them. And I have to also make sure that I'm making the right balance as far as building into retirement accounts and not prioritizing or overly prioritizing my taxable accounts. So a mix of different things. But after I got the position into Taiwan Semi, NVIDIA, and AMD going, I said, I think it's time for me to incorporate SMH, so that I don't have to, necessarily have to be on top of so many individual companies. But all 3 of those I have no problem with. And I think that I have a reasonable amount of individual stocks that I'm willing to keep up with the fundamentals and the earnings reports, the forward PE, to make sure that they continue to be in line with my goals. I will play it back so I can watch it. Yeah, I didn't go into anything deep on it, but that's something I potentially could do another update. When you build up a company stock by dollar amount or by percentage. It's kind of a mix of both. At one point, my growth portfolio, for example, it was I never had this issue with my retirement accounts, because my retirement accounts were pretty much primarily going to be into funds or target date funds or mutual funds. So, but when I started investing for my daughter, for myself, outside of my 401k, I had to do some work to get things rebalanced, because at one point my growth portfolio was over 50% Apple stock. And so I had to say, hey, that's when I incorporate, that's part of the reason why I did that over 3-year stretch of investing into VTI, because of what I had done with the Apple stock. I said, I need to put some work into having some ETFs, some stability, some different things in my portfolio. So I am not sad. I am a bit disappointed in myself that I completely stopped for a long stretch of time investing into Apple stock. But it wasn't just because I had gotten too heavily weighted into those individual stocks. It was also because I had $120 average on Apple stock. And yeah, I was being cute, trying to think I'm not going to mess up my average. And yeah, that's one of those things that I've gotten out of my head and don't do anymore. I'm not trying to hold on to any average, because my average now in 2026, when it's a company or a fund or something like that, that is thriving, on track to keep growing for the next few years, it's not going to matter in 2036. So not holding on to that anymore. But yes, So I build trying to have a strong amount into funds and then lower allocations into those individual stocks, if that answers the question. I hope it gives a little bit more clarity. I don't want to necessarily say I am I couldn't tell you off the top of my head, but I've created a balance that's around, say, 40 to 50% into funds, and then um, say less than 10% into crypto. And then I'm going to have those individual stocks. I have Realty Income and Main Street Capital, as well as I have Mag 7 individual stocks. Those type of things are going to be in the remaining percentage of my portfolio. But it's a manageable balance for me. I definitely encourage those that don't want to take on that level of responsibility to start off, or if they're not ready yet, do not wait until you get more things figured out. I'll tell you, an S&P 500, total US stock market, total world, potentially, if that's something that interests you. Or like something like a VXUS, something like that. Those are investments that anyone can get started with. It's giving you exposure to hundreds, some thousands of different investments through one investment choice. Just find one that has a low expense ratio. And in my opinion, you can't go wrong with that. Then after that, if you want to take on Microsoft, NVIDIA, Google, I'm definitely going to encourage you to start with those mega cap companies, nothing small, that you have to have your trader hat on and have a higher level of expertise in order to navigate and make sure to get in and out at the right time. I'm not stressing about when I'm going to get out of my Apple stock or my Google stock or something like that. I'm holding, and I feel comfortable that I will be able to hold on for many more years to come when it comes to certain investments. So I just have to be aware. I understand that they're going to have lawsuits. There's going to be things that go on. But these are companies that, in my opinion, will recover from them. Meta, Google, YouTube specifically, they have different issues going on right now. They're always, big companies like that are always going to be having issues going on, whether it's, are they a monopoly, the safety of the children, addictive features in the apps, all these things, you never know what things going on with the tariffs and different companies not being able to get different parts and shipping, and there's always going to be obstacles. But these are large, well-known companies. Apple's ecosystem, people are going to continue buying these products. So I'm comfortable with holding those large companies in my portfolio. And if you're not yet, like I said, you can rely on ETFs that are going to rebalance. I also give you guys updates on that, like SPMO, SCHD. They rebalance for you. All of these funds do. So when a company is not performing in line with the criteria that they have in place, whatever that may be, with SPMO, it's momentum. With the S&P 500, they're more relying on just the market cap of the company. So if you're not in line with that anymore, you're out. And then they're bringing in another company that is going to be on track, that deserves that spot in that fund. So it's just a matter of not being in one with a high expense ratio, not being in one that the performance is not on track to always recover. That's what I want in my portfolio. I want confidence that after these war times, after going through C-19, whatever comes up, that I'm still going to be on track. The world is not going under. The the US economy is going to come back. So we go through different rough times, but it is what it is. I'm going to work. I'm going to invest. And like I said, I'm going to work with what the market is giving me. I'm working with it and I'm making sure that I'm taking advantage. So you sold your Palantir stock, 13 shares, bought at 16, sold at 133. Okay. I don't have Palantir in my portfolio right now. I didn't even know that I ever had Palantir, but I traded it some years back. The only reason I accidentally stumbled across that is I searched my pictures. Why was I searching Palantir in my pictures in my iPhone? I don't know. I don't know if I searched Palantir or PLTR, maybe the ticker, but I found that I had it in my portfolio at one point. It was some time ago, but yeah, I did it as a trade. So that must have been my intention and plan for it to be a trade status at that time. I started building my position per securities, 125. So are these dollar amounts that you're sharing here the one? Is that how you build up your position sizes that you're listing here? But yeah, some people, you have to do what's the right fit for you. So, and I share based on what I think is a reasonable stopping point or time to give an update. Just like I said, I shared my update on S&P on that Monday because I had gotten all my dividends in. So I share at certain points, say I get to 100 shares or 150 shares. I just sometimes find that to be a good time to go ahead and give an update, share sizes. Okay. So yeah, with those type of share size goals, yes, you have to be committed to a select number. If you don't, based on your budget, that's how I go about it. So I want to build substantial share sizes like that also. And so that's why I am somewhat selective into what I want to have in my portfolio. And hopefully, I'm putting the work in, doing the research so that I can focus on what's going to be most impactful of, the percentage gain when it comes to what I'm building over there. So, okay. So guys, thank you so much for being here with me through today's show. And I'm going to wrap it up for today. I don't see any more questions or comments coming in. What is going on with this? Again, I want to thank Vincent for the super chat, as well as being a longtime channel member, and Craig for coming through, chatting, and giving the second super chat of the day. So let me take a look. Any more comments coming in? Nope. All right, Apple. I have 10,000 shares over many years. Okay. Yeah, like I told you, I took that break from Apple. I wish I would have at least gotten to 100 shares of Apple, but that's in my taxable accounts. But, I still have the opportunity to keep on going with it if I want to. But I'll tell you, taking a break from Apple and working on my Google and my Tesla and other positions, they are actually doing better than currently, percentage-wise. I'm up more on those positions than I am on my Apple stock, but I still do believe in that company. And go back. All right. So guys, last station break of the day. For those of you that are still here, as I mentioned in my description, make sure to give the live a thumbs up if you haven't done that. But in my description, you will see my links for KGU, where I am a crown trader. That is Keenan Grace's Discord. You can check that out if you have an interest in expanding your knowledge, learning options trading, and things like that. Also, you can become a channel member. I have 3 membership tiers. You can see the detail of that. I have a video that gives you a description, but I pretty much support all of my channel members in the same way. And as a channel member, you can request members only live streams. And so it'll be a smaller group of us where we can talk and work through any questions that you have. And let's see, I can't find it. Follow me on other platforms. I'm on TikTok, I'm on Instagram, but please do not be scammed. There is a fake Lisa over on TikTok. If you ever come across any fake pages, I would appreciate you reporting them. But I am more active on Instagram on a daily basis. If you're not already following me over there, check me out. Thank you, Noelle, for tuning in and chatting and sharing a name that I will try to remember. And as I mentioned earlier, I have a link for the MooMoo Investing app in my description also. They are currently giving 8.1% APY on your uninvested cash for the first 3 months. And then it goes down to those rates like I was mentioning in the 3.5, 3.7 range. But it's a great opportunity to get started with a new account, take advantage of that higher APY for those first 3 months, and have great research tools and a place for you to build a taxable account that you can tap into. Like I said, when it comes to what I've been building for myself, when I got started, it was all about 401k and retirement. But over the last few years, I see the benefit of investing, having as much money invested and not wanting everything tied to that 59 and a half age range. I have different goals, different needs, and but I want to see my money maximized and growing. So I have started to incorporate portfolios for different reasons with different flexibility. So, okay. So that is it for today's live stream. I think it was a good one. Like I said, I will add chapters. I shared 2 recent videos that touched on things that we were chatting about in the video. This is for the super chatters, and then I'm going to jump over to my ending song of the day. But I appreciate y'all, and I will see you next Sunday, 3 p.m. Eastern Standard Time. But be on the lookout for my shorts and videos throughout the week.
Thank you so much. We do greatly appreciate it.